Does it make sense to you that a protocol serving over 1 trillion queries, powering the absolute backbone of this industry, is trading at 5 cents? Right now, the graph is sitting at a historic crossroads. We are looking at a divergence that is almost impossible to ignore. On one side, you have massive fundamental expansion into monad and AI agents. On the other side, price action that looks like it is on life support. Most people are looking at this chart and seeing a dead coin. I am looking at the 2-week time frame and seeing one of the most aggressive risk-to-reward setups in the entire market. But let's be crystal clear. This is the final line of defense. We are sitting on the lowest support in history. If this holds, the upside to the mean reversion is triple-digit percentages. If it breaks, we enter price discovery to the downside. I am going to show you exactly how I am playing this. I will break down the new Ampersand standard that could link GRT to the $30 trillion AI economy. And I will share my specific entry zone, my hard stop loss at 4 cents, and the exact targets where I plan to trim my position. This is not about hope. This is about data. Let's be honest about where we are. The price action for the graph over the last few months has been painful. We have been bleeding out since the highs of early 2024. Currently hovering around 5 cents, sentiment is in the gutter. You go on social media and people are tired. They are capitulating. And usually, that is exactly when you want to start paying attention. The market has been distracted by shiny new meme coins and hyper-speculative plays, leaving infrastructure tokens like GRT to rot. But here's the reality. Price is fractal, but utility is linear. While the price has been compressing into this falling wedge structure, the actual usage of the network has been climbing up and to the right. We are seeing a disconnect. The market is pricing GRT as if it is becoming irrelevant, but the on-chain data suggests it is becoming indispensable. This 5 to 7 cent region isn't just a random number on a screen, it is a historical demand zone. We saw buyers step in here aggressively in the past, and we are seeing price stabilize here again. The question is this a falling knife, or is this the generational bottom before the next leg up? To answer that, we have to look at what has changed under the hood. While the price has been stagnant, the team has been shipping critical updates that position the graph for the next major narrative. The first thing you need to understand is the integration with Monad. Monad is arguably the most hyped Layer 1 launch coming up, promising extreme throughput. The graph announced that Monad mainnet is already supported across their products. Developers can query Monad on the graph from day one. This is massive because it ensures GRT remains the indexing layer for the fastest chains in the ecosystem. They aren't just sticking to Ethereum. They are moving where the liquidity is going. But the bigger story, the one that Gartner estimates could influence $30 trillion in purchases by 2030, is AI agents. We saw the CEO of Edge and Node discussing the new Ampersand standard. Right now, AI agents are starting to transact, but they lack data integrity. They need a way to verify that the data they are acting on is real. The graph is positioning itself to be that verification layer. If GRT becomes the standard for how AI agents verify on-chain data, the current valuation is laughable. On top of that, we have the expansion to TRON. The graph's token API now supports TRON, meaning developers can index token balances and swaps instantly on one of the most active chains for stablecoin usage. This is about capturing volume. More chains, more queries, more demand for the network. Finally, look at the regulatory side. The graph has joined the Ethereum Protocol Advocacy Alliance. They are sitting at the table with Aave, Uniswap, and Lido to shape future regulation. This legitimizes the project not just as a tool, but as a pillar of the crypto economy. When you combine regulatory access, Monad integration, and the AI narrative, the fundamental thesis is stronger than it was when price was at 50 cents. The only thing missing is the market catching up. Now, let's strip away the news and look at the cold, hard data on the charts. I am looking at GRT on the 2-week time frame. I choose the 2-week chart because it filters out the daily noise and shows us the true institutional flows. First, look at the moving averages. Price is currently below the 10, 21, 55, and 100 EMAs. In a vacuum, this is bearish. It shows the trend is clearly down. We have 2 major descending trend lines acting as resistance. The first one, the orange dotted line on my chart, started from the May high at 13 cents and rejected price in July. The second, steeper trend line, originates from the February 2024 high at 50 cents. We have been rejected by this line in March and again in December. However, we are sitting in a critical load zone. I have marked this green box between 5 cents and 7 cents. This is where I am interested. Why? Look at the Heikinashi RSI at the bottom of the chart. It is flashing extreme oversold conditions. Every time we have seen the oscillator this low on a high time frame, it has preceded a significant reversal or at least a relief rally. We also need to look at the volume profile on the left. The point of control, the price level where the most volume has been traded, is sitting up at 10 cents. Price has a natural tendency to revert to the point of control. Currently, we are significantly extended below it. This acts as a magnetic pull. If we get any momentum, a move from 5 cents back to the 10-cent magnet is a 100% move. That is the asymmetry I look for. My strategy here is precise. I am accumulating in this 5 to 7 cent range. This is the same zone I mentioned in my update on November 14th, and price is still respecting it. But as a trader, I must have an invalidation point. I cannot marry a bag. My stop loss is set strictly around 4 cents. Specifically, I need to see a weekly candle close below 4 cents to invalidate this setup. If we close below 4 cents on the weekly, it means the historical support has failed, and we could drift down to 3 cents. I am not willing to hold through that breakdown. If that happens, I am out, and I will look to re-enter lower. Now, let's talk targets. If we hold this level and bounce, my first major resistance is 8 cents, which was the last support we lost. After that, the first descending trend line sits around 10 cents. This aligns perfectly with the volume point of control. So, my take-profit strategy is tiered. I am looking to trim my position aggressively at 10 cents, 15 cents, and 20 cents. These levels align with the Fibonacci retracement levels anchored from the February high. The 0.236 fib is at 15 cents, and the 0.382 fib is at 21 cents. If the market goes parabolic, I have moon bags set for 30 cents, 47 cents, and a final runner at 73 cents. But let's be real. I am taking the majority of my risk off the table at the first 3 targets. While I am waiting for this 2-week setup to play out, I don't just let my capital sit idle. I am constantly farming stablecoin yields and positioning for airdrops to keep my portfolio growing during the chop. If you want the complete breakdown of how I do this, I have compiled all these tactics in my DeFi guide. It covers everything from liquidity provision to finding the best yields on platforms like Aave and Aerodrome. It is available in the pinned comment for just $4.99, which helps support the channel. Back to the chart. The key takeaway here is the risk-reward ratio. We are risking a drop from 5 cents to 4 cents, a 20% loss, for a potential move to 10 cents or higher, which is a 100% gain. That is a 1 to 5 risk-to-reward ratio. Those are the bets I take every single day. So, here is the strategic outlook. We are in a do-or-die moment. The best-case scenario is that Bitcoin stabilizes, the AI narrative picks up steam with the Ampersand news, and GRT reclaims the 8-cent level. Once we flip 8 cents, the path to 10 and 15 cents is relatively low friction because there is very little volume traded in that gap. The worst-case scenario is a general market flush. If Bitcoin breaks down, GRT will likely test that 4-cent invalidation. If that happens, do not be a hero. Respect the stop loss. I will personally exit and wait for the dust to settle around 3 cents. However, for long-term holders who are not trading this but investing, this zone represents incredible value. You are buying a protocol with over 1 trillion queries and deep integration into the future of AI at a 90% discount from highs. The asymmetry is clearly skewed to the upside, provided you manage your risk on the downside. To wrap this up, the graph is boring right now. It is depressing. And that is exactly why it is interesting. The fundamentals are expanding into monad and AI, while the price is retesting multi-year support. I am betting on the data, not the sentiment. I will be updating this trade in real time as we approach that weekly close. If you want those updates faster than I can edit a YouTube video, make sure you join my free Telegram group. The link is in the pinned comment below. If you enjoyed this deep dive, you should check out my previous breakdown on other infrastructure plays that are showing similar patterns. Thanks for watching, never financial advice, and I will see you in the next one.